G'day folks, welcome back to another update for natural gas and its ETFs. Now, it's actually hit this resistance we projected in our last video. Hit the resistance and actually been pulling back from that level. Before we go any further, make sure you hit that like and subscribe button to help support the channel. First, in terms of the outlook for natural gas, as of today, January 15, natural gas prices have been experiencing significant volatility influenced by factors such as seasonal demand, fluctuations, geopolitical tensions, and the increasing energy requirements of AI data centers. Analysts anticipate US natural gas prices to average 3.32 per million BTUs in 2025, with AI data center growth contributing notably to demand. For the ETFs, BOI aims to deliver twice the daily performance of the Bloomberg Natural Gas Sub-Index, making it suitable for short-term traders seeking amplified exposure to natural gas price movements. The KOLD seeks to achieve twice the inverse daily performance of the Bloomberg Natural Gas Sub-Index, appealing to traders anticipating declines in the natural gas price. The UNG tracks daily changes in natural gas spot prices through near-month futures contracts, offering investors direct exposure to natural gas price fluctuations without leverage. In terms of the outlook, high volatility in leveraged ETFs like BOIL and KLD makes them suitable for short-term trading only. Investors are also monitoring geopolitical tensions and seasonal weather impacts on natural gas prices. In terms of the AI data, the expansion of AI technologies is significantly increasing electricity consumption in data centers, with projections indicating that US data centers could consume up to 606 terawatt hours by 2030, representing about 11.7% of total US power demand. This surge is expected to drive an additional 3 billion cubic feet per day of natural gas demand by the end of the decade. So starting off with the natural gas commodity price. So as for those new to the channel, we always look at the long-term trends. So we've got the monthly, the weekly, and the daily here. And also for those new to the channel, we've got these moving averages, and they can be found in the video description below if you want to learn how to draw those on your own charting software. So what we look at is when the price is broken above the moving averages here on the monthly, that's a bullish signal or a sign. On the CCI likewise, when it's above the moving averages, that's also a bullish signal. So nice bullish movement there on the monthly. On the weekly, it's been now bullish since around early September on the CCI and also the price. So again, more bullish movement, and then there's no divergence on both the monthly and the weekly at the moment. On the daily, if I zoom into this one, a few lines here and it's deliberate. It's been fluctuating above and below this moving averages on the CCI and also the price. At the moment, it's broken down into that moving average range of the CCI, giving us a neutral signal. The price is also pulled back towards that moving average, although not quite into that moving average range yet. And I've drawn this diagonal ascending trend line and this descending trend line, and that's after hitting this minor resistance up here at 38.78. And it looks like it may actually come back down towards this trend line possibly. Now, obviously, we'll keep an eye on that. If it does keep declining, we're going to see the CCI break below the moving averages. But again, we may see a bounce from that trend line, or alternatively, it could actually fall through and actually fall a lot further. So we'll keep an eye on that one step at a time. We don't get too much ahead of ourselves at the moment. If we go to the intraday chart, we always trade in the direction of the higher time frame. So if you're trading on the hourly, as in this example, we don't take any trades at the moment until we see a more conclusive break above this moving average of the CCI. Could bounce, or it may fall through that moving average range, in which case we'll take short trades only on the hourly. So back here, now this was a decline after hitting this resistance at 38.78, and we anticipated a bit of a pullback from there, and it did. Now it's actually fallen. In terms of a Fibonacci retracement, there was no divergence to talk of, but in terms of Fibonacci retracement, we'll take it back to that significant low. You can see it bounced off that 61%, which is a key area to look out for. This could actually continue to rise if it does that. And that we want to, if that hourly breaks above that moving average on the CCI, in which case we might see a break above that moving average as well on the daily. Then you take long positions. So at the moment, avoid going long or short until we let it decide how it's going to operate, whether it's going to fall through this moving average range on both the price and the CCI and the hourly, or whether it's going to bounce from here. But at the moment, just stand aside and let it play out for another few hours at least. So for BOIL, again looking at the monthly, it's bearish outlook on the price. There's no CCI for the monthly, but bearish momentum at the moment on the monthly. On the weekly, we've had this bullish divergence for some time now, since early 2023 versus lower lows on the price, and I'd like to see this break a lot higher, preferably to those previous highs, and I want to see these moving averages start widening, and if they're going to continue in an uptrend. So in other words, I want to see it widen like it did back here to be able to be more confident and bullish on where it is at the moment. That's a break above the moving average, which is a start. But again, I'd like to see these moving averages widen in that upward move. But at the moment, that divergence is still playing out, and we may see further upsides, hopefully, in the coming weeks. On the daily, now we did have this resistance up there after we hit that resistance previously. Now, since then, it's broken through that, so I'm going to remove that resistance. So at the moment, it's blue skies. The price is still moving higher. The CCI is also above its moving average range, so bullish movement on the daily. And what that means, if we go to the intraday chart, we take long trades only. So you would have taken long trades from that period back there from the 8th of January. So looking at the hourly chart, for example, you would have taken that first long trade when the CCI broke above the moving average of the CCI and also the price, and it would have been that candle there. So you would have on that entry on that hourly, and you would have closed it out when the CCI broke into that moving average range there. So you would have closed it out on the close of that candle on that hour right near the top there, and that would have returned a 16.56% return after 15 hours of trade, if you're following that on the hourly. Now at the moment, the CCI is broken to the downside, and it's still somewhat bearish to neutral. Don't go short, don't go long. I would go long only if I see that break above the moving average band on the CCI. Then that's in alignment with the daily BOIL. Next, looking at KOLD. Now on the monthly, it's actually broken below that moving average range, giving us a bearish signal. There's no CCI for it on the monthly. On the weekly, we did have this bullish divergence versus lower lows on the price. Now, since that period around about middle of 2022, or end of 2022, it broke above, and that's what I mean by the widening of those moving averages. I want to see those moving averages widen, and you would have started getting into that trade back there during those weeks in alignment with this bullish movement on the price as well as the CCI. Now, since then on the weekly, at the moment, it's actually broken below those moving averages and also the moving average of the CCI. So bearish momentum at the moment on KOLD on the weekly. If we zoom in on the daily, now since our last video, we did anticipate it hitting this support at 33.95, and it's actually been hovering around. It's a bit hard to see, but you've got a couple of wicks there on those two candles of those 2 days since our last video, and it's currently sitting around this support at 33.95. Now you'll notice here as well on a daily, it's actually been bearish for most of that period. So again, if you're trading this on the daily, you would have taken that short position when it broke below the moving average of the price as well as the CCI, and close it out once that CCI breaks into that moving average range. Now looking at the intraday charts, again taking short positions only. So going back to, that started back here on the daily at 11th of December. So that was back during this period. Let me just get rid of that extension. So you can see there during that period when it first broke below that moving average range of the price and the CCI, you would have gone short on that candle there and closed it out the first time on that when it broke in that moving average range and so on. You can hold it following the moving averages and close it out when it breaks into the moving average of the price. I prefer not to do that because sometimes you get these massive moves to against you, and you lose some of your profitability. Whereas the CCI gives you a lot better entry, a lot better exit signals in terms of getting out. You can see there, for example, getting out on that one would have been a better proposition had you got into a short position there. More recently, you would have got into a short position on that one and closing it out when near the bottom there. You can see there that would have been a nice little trade to take. Now the price is retraced back close to that moving average range, but you'll notice the CCI is also at the moment a very micro bullish movement. So you could have stayed in with the price movement of the moving average of the price movement, but I prefer to get out when the CCI breaks into that moving average range. So at the moment, going short only, so avoid going long in alignment with the daily. The daily is predominantly short. If that breaks again below that moving average range, take another short position. But again, keep your stops tight and get out when the moving average of the CCI breaks into that moving average range to maximize your profitability. And lastly, looking at UNG. Now this one's showing the CCI on the monthly, and it's actually a fresh breakout to the upside on the monthly, although the price is still below the moving averages. So a somewhat neutral to bullish movement at the moment, very slight bullish movement, nothing too dramatic. Again, I'd like to see this break above the moving averages over the next month or two. On the weekly, we did have another bullish divergence here versus lower lows on the price. Now that's been moving higher since, and it's still bullish on the CCI. And that's actually made a bit more of an advance than before, than the previous charts. But again, I'd like to see this moving average range on the price widen more, with the price moving higher than that previous high as well on the weekly. So somewhat bullish movement on the weekly. On the daily, it did hit this resistance here at 1236. We've been predominantly bullish on the daily during this period, and at the moment it's still bullish. Hasn't quite reached this resistance yet. So at 1948, again, if that continues to the upside, I'd like to see this break through that resistance. So let's go to the intraday chart. So again, taking long entries, long positions only, no short positions. Now at the moment on the hourly, that's broken to the downside. It's currently in a neutral position on that CCI within that moving average range. The price is still above the moving averages, but again, I'd like to see this break higher on the hourly, like it did back here. So during that period, for example, you would have taken a long position there. When a CCI broke above the moving average range on that candle, that was also above the moving average of the price chart, and you'd close it out when that CCI broke into that moving average range on that candle there at the close of that hour. And that would have given you just over an 8% gain in 10 hours of trade. So since then, even though the price has gone higher slightly, don't be fooled. Wait for that CCI to break above to give you a bullish signal, to be more confident, to not 100% guaranteed, of course, there's no guarantees, but a better probability of success in that trade. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page, where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again, and see you in the next video.